Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, October 25th, 2023. As always, we'll start with our executive summary from today's leadoff morning note. If you want the analysis supporting these conclusions, as well as what to do about the conclusions in your portfolio, obviously need to be a client of 42 Macro. So we'll start with number one. Global large cap growth earnings season is off to a poor start, with Alphabet down 6% pre-market on a cloud unit miss. Texas Instruments down 6% pre-market on poor sales guidance, and Gucci parent Kering down 4% after reporting a drop in sales. Old reliable Microsoft is up 4% on a cloud unit beat. Number two, dispersion is the name of the game late in the business cycle as various companies traverse peak demand and peak profitability at different times. Recessions are commonly misunderstood as a monolithic process whereby every consumer and business gets impacted instantaneously by the switching off of the economic light switch. That is not the case. Lower quality borrowers experience recession sooner and deeper than higher quality borrowers. While income growth is slowing, it is still trending at a robust enough level to perpetuate a winner-take-all phenomenon amongst corporations that puts the onus on stock selection as opposed to picking factors, sectors, and geographies to drive outperformance late in the business cycle. And last, crowding model is currently generating bullish signals in 1, 2, 3 U.S. equity sectors and factors, and 1 U.S. fixed income factor. And as well, in our discretionary investment idea summary, is now supporting a long half position in a very interesting macro factor. So obviously, you need to be a subscriber to actually get the actionable investment conclusions from our research. We'll transition to our cross-asset performance monitor here. We'll start with U.S. equity sector. So S&P down 2.8% week over week, being led lower by consumer discretionary down 5%. We also have base and materials down about 5% as well. We also have the XLRE real estate down about 5%, and then outperforming consumer staples only basically flat week over week. In terms of factor performance, S&P down 2.8%. As I mentioned, somewhat limited dispersion amongst factors, with the exception of high beta down 5.8% week over week. Geographic performance, pretty diverse here. S&P kind of in the middle, down, or at least in the lower half here, down 2.8% week over week. Geographies are being led lower by Canada, down -4% week over week. Brazil outperforming alongside China, up around 1.5% apiece. Down 1.5% apiece. My apologies, down 1.5% apiece. Getting to fixed income, we're more or less flat in terms of the core ag. TLT's flat. Pretty much flat. The only thing that's kind of lagging here is leverage loans at down about 1% on a week over week basis. It rhymes with the move we're seeing lower in high beta in terms of equity factors. In terms of currencies, dollars more or less flat week over week. Swiss franc still outperforming the safe haven that it is, up 0.7%. Offsetting that is the Canadian dollar, down 0.6% week over week. In terms of commodities, commodities slightly off week over week, minus 0.6%. Crude oil correcting a little bit, minus 2.4% week over week. Offsetting that, you got precious metals up 2.1%, and then uranium having a big move higher, up 5.7% after last week's correction. And then crypto, Bitcoin seems to have stalled out in terms of the front running of the ETF approval. We'll see if there's another leg higher, to the extent we do see the Fidelity or BlackRock ETFs approved. But Bitcoin's up 21% week over week, right around where Solana's trading on a week over week basis. Ethereum a little bit lagging. Bitcoin up 14%, but outperforming the rest of the crypto space. And then lastly, transitioning to my Lombo dashboard here. Leave you with some actionable signals from the trading ranges. You still have an overbought signal in both Bitcoin and Ethereum here, so obviously not the best spot to be chasing in terms of commodities performance. But obviously, you start to see some bullish price momentum develop. You could very easily see the dip get bought to the extent there's the real fundamentals behind the speculation in the moves that the moves are currently implying. And then base metals nearly bought for anyone kind of trading that, but I highly doubt any investors are really allocated to that particular global macro factor exposure. So we'll wrap it up there. Darius Dale presenting our macro minute for Wednesday, October 25th, 2023. Best of luck out there today. We'll catch you back here tomorrow. Cheers.